Welcome to the StockMiner.com studios. I'm your Stockminer, Brian Johnson. We did have a move up today in the markets, more of a gap up, really, today in the markets, if we're just being frank about it. As you can see, the Dow won't show us, but the SPY will. So as we look at a SPY chart, I'll tell you what, since we're talking about the Dow, let's just look at the diamonds. There we go. The DIA, it's basically a reflection of the Dow, in case you guys did not know that already. And you can see here we got the gap up, move down, pull right back up. So for the day, quite honestly, we really didn't go anywhere. I mean, yes, we're up for the day, but we didn't go anywhere. We had a gap up followed by a close right about where we opened. So we had a move up, but as I said, it was really just only based on the gap. Now, going back to the original Dow chart we were looking at, one of my plays was to go long over 10,500. Notice how we gapped up above 10,500, pulled back into where? 10,500, where it held, and then started to move back up again. That would have really been about the only trade you had if you were going to try to take a trade today. But keep in mind that, I mean, the push wasn't certainly the most bullish. Most of the work came in the after hours in the overnight futures markets as they moved everything back up. So we are above 10,500. We are moving forward, but I want to tell you guys, this is why you got to be cautious. The upside, I think, is very fragile. Reaching this level is still very achievable. We can make it up there. We just want to be very cautious if you're going to play this thing to the long side. As you can see, it is not screaming upwards, it is more like creeping upwards. Now, we have entered options expiration week, which means there will be extra volatility in the markets. So, will we see more of this heavier push upwards come in the next couple days? Sure, why not? We are up above 10,500, and until we get back below this area here, I've got to remain with the bulls in the short term. Cautiously with the bulls, but with the bulls. So, waiting for breaks back below this 10,450 mark. That is the point where now you want to maybe start looking at a little change of direction in the market, something more on the short side. Keeping in mind there's still a lot of work to do to the lower side. Back below 10,300, now we're talking. Now we've really got something to kind of sink our teeth into. If you want to get a little bit more bearish on the market, that would certainly be an opportunity there. But you can see where we've had this little consolidation to the upside. We are above 10,500, and on the daily, that puts us where? Right up into this area. Now that we've gotten the break above the 200-day moving average, you have to respect what the bulls have done at this point. Will we make the 10,700? Very possible. Could certainly do that. We're only 160 points away. How will we do it? Will we be able to run up there during the middle of the day? I don't know. Maybe more of this action takes place in the after hours. You wake up to a gap up and then it goes really nowhere. How do you play it as a day trader? Well, you really don't. You just sit on your hands and wait. Have we completed an inverse head and shoulders? I know that's going to be on people's talking chats. You can mark it down. There's going to be blogs talking about this as an inverse head and shoulders pattern. And you know what? For the time being, they're absolutely correct. Could be viewed as that. If that's the case, guys, we are looking at a pretty major move up from here. We could see it up into the 11,000 mark or even up into test 11,200 if that's the case. Yeah, I know. It's quite a move, huh? Will it happen all at once? Don't know. But I'll tell you what it will do. As long as this market continues upwards, I'll bet it bleeds those that are trying to buy puts on the market out of their money. Remember, options expiration week, and all of those September options do expire on Friday. What better way to put the pain on people than to bleed this thing upwards when I would assume that most people are going to be more bearish on this market than they are bullish at the time being. They could really put a lot of pain on people if they continue to either wander sideways or even float up for most of the week. So let's see if we get any more indication of this. We have one close above it. I always give the bears a chance to pull it back down the next day, or at least the next couple of days. NASDAQ on a 60 shows the gap a little bit better. You can see how it gapped up into the 1910 area. I said a break above 1900. 1920 would be my next overhead resistance. We stopped at 1921 today. From a daily, a little bit more clear about what we were looking at. See this overhead picture? We got to close above it. It's bullish. I don't know what else to tell you guys. For the time being, you just got to view this as bullish. Cautiously bullish at this point, but yet bullish. Don't be afraid to take those long trades. Just be careful. And I'm not sure I'd be holding many of these overnight. From a weekly, also back up to this overhead level, which I had spoke about this weekend too. Going to watch this very careful to see if we get an actual close above it by the end of the week. SPX on a 60-minute, got the little gap up, run up, pull back, kind of finish right up here towards the ties. Working our way into 1125 to the 1130 mark. Those are my next overhead levels to watch. Just keep your eyes on. Now look, we got one close over the 200-day, so keep your eye on this 200-day moving average. That was where the pullback kind of happened today. If I go back to the 60-minute, you can kind of see what we got. We got the move up and over 115, come back and kind of retest that 1115 area before moving back up. So 1125, 1130 are my next areas of overhead resistance to watch. Why? Because on the daily we have some very strong overhead resistance here at 1130, and we've already seen this area broken by the NASDAQ. So you're going to have also pundits out there that are going to be screaming about non-confirmation in the SPX and the Dow. I don't care about that. I don't look at that type of stuff. Matter of fact, in a lot of cases, I usually find that if the NASDAQ goes ahead and breaks these overhead highs, it's usually followed by the markets. Just because they're not there yet doesn't make that necessarily non-confirmation and a better chance of a move to the downside. In my book, it usually means there's a better chance of a little bit more upside action. So we'll see if that plays out. I'm still watching cautiously as we approach the 1130 mark. I still think that there is more damage to be done by moving upwards for the bulls than there is to actually pull back and rest a little bit here for the bulls. So we'll see if that plays itself out. If and when we do decide to pull back, I'm looking at some potentially large red candles to present themselves in what I'm still going to consider a pullback. I'm not saying we're dropping to 1,000 on this next move to the downside. I can't look at it that way. I'm going to only look at it as a pullback, but I think it will happen fast and furious. I just want to be prepared for that. From a weekly perspective, back up to this overhead area. That's at 1120, actually 30-ish mark is what I'm really watching here, but you can see where we're hitting this overhead resistance. These are weekly charts, so we'll talk more about them as the week progresses. The VIX is starting to drop out here again. We did see a move up in the markets with a move down in the VIX, so it is still playing out down here as it kind of bleeds out from a volatility side. From the weekly perspective, showing us the same thing. We'll see where the weekly chart finishes, but I like this 20-ish area, or even maybe below here, about the 18, 19-ish area, to find some support. Apple on a 60-minute up sharply today, $3.63. With the gap up above that 266 area, lots of stops being hit, lots of bears getting out. Saw a heavy push at the beginning of the day, and then some very light trading for the rest of the day, going nowhere. After about the first hour or two, we're done. From a daily, you can see it here hitting this overhead resistance level right where I had it painted on the charts. This is why it's important to continue to watch these charts, maybe mark this stuff in your own charting programs. Give yourselves at least ideas of where this stuff's going to go. Stopped right where we thought it would, right here at the line. Notice how we did get above it, but closed below it ultimately by the time it was all said and done with. So up over 268-ish or so, I think there is a good opportunity to maybe push back into this line. It might take us a day or two to try to get there, but as long as the markets remain bullish, I think Apple will also remain bullish. From a weekly coming up into this overhead area, we're really watching this bigger area here closely. That's about 275, 280, ultimately 280 for me if you really want to get more bullish on Apple. Until then, it's just stuck in this trading range. It's just flat sideways. FAS on a 60 was up, but mostly on the gap. Very hard to play this when you get a gap up into this area. We have an open at 22.36 and a close at 22.71, giving you 40 cents to play around with. But this is sideways. This is sideways. These gaps are very, very difficult to see. Very difficult to know are coming, especially over a weekend like this where it gaps up on a Monday. I did mention, though, that Mondays have been typically good to the market, so no reason to think that we wouldn't have done this today, entering the options expiration week. Let's see if it can hold on and push its way up higher into these areas here. Up over 23 might be a good place to look for that in FAS. From FAZ, my lines are all messed up because Stock Charts does that every once in a while. I'll fix those lines for you and have those ready for you tomorrow, but you can see the drop to the downside. Looking at this pressure point right down in this area here, which is where we've reached 1286, finishing at 1284. No way to get below this 1325-ish area for a short because we gapped. Very difficult to play these gaps. But as it is right now, still nothing really bullish to be seen in these in FAZ whatsoever. It's straight down at the time being. So here we are back to the beginning. We got to gap up, guys. It's still bullish. You still have to view this as bullish for the time being, but cautiously bullish. Remain that way. Very difficult trading if you tried to trade today, okay, because of the gaps. Watch those closely. The fact that we didn't really go anywhere once we gapped up tells me that the market is still indecisive about its real overall direction. Let's watch closely, see if we hit these overhead levels. And once again, I'll be back with you again tomorrow night with another video. Bye.